Brad Williams. This video will focus on what should I know about leasing versus buying a car. Buying a car means that you own the vehicle once your payments have been made. A lease is an agreement to use a vehicle, new or used, for a certain number of months and miles. Choosing whether to buy or lease can be an important financial decision. The most important factor to consider is that leasing is like renting, and your payments won't go towards owning the vehicle unless there's an option to purchase. Instead, you'll need to return the car once the lease ends. To help you choose the best option for you, here are some of the key factors in buying versus leasing a car. Buying a vehicle, your monthly payments or loan may be higher than leasing, but your payment goes towards paying down your loan and equity in the vehicle. You have the option to sell or trade in the vehicle when you want to purchase a new one. You can drive as many miles as you want, but high mileage and excessive wear and tear affects the vehicle's resale value. A typical auto loan term ranges from 3 to 7 years. You own the vehicle and get to keep it at the end of the loan term. Leasing a vehicle, your monthly payments may be lower than buying, but the payments are going towards depreciation of the vehicle during the lease terms plus rental charges. You may be responsible for early termination charges if you end the lease early. These fees can be very expensive. You can't simply return a vehicle and stop making payments. At the end of the lease term, you can either turn the vehicle in and pay any end of lease fees or purchase the vehicle if your lease includes a purchase option. Most leases restrict your mileage to 10 to 15,000 miles per year, and they may also include fees for excessive mileage and for wear and tear at the end of the agreement. What's considered excess wear and tear is usually determined by the leasing company. A typical lease is 2 to 4 years. Negotiating your lease terms, you can get a better deal if you compare several leasing offers and negotiate your terms. Lease terms are negotiable, and the most common items consumers negotiate include the cost of the vehicle, the estimated value of the car at the end of the lease, also called the residual value. This is what you will pay for the car if a purchase option is included. Amount of a down payment, value of the trade-in of your current vehicle, rental charge or money factor, mileage limit, and purchase options. Calculating your lease payment. With a standard lease, most of your monthly payment goes towards the amount that the vehicle depreciates over the lease term. You may also pay a monthly fee to the lender for renting the vehicle. Here are some steps commonly involved in calculating the monthly lease payment. You and your leasing company negotiate the cost of the vehicle minus any trade-in, down payment, or rebate. For example, $20,000. You decide on the lease terms, typically 2 to 4 years. For example, 3 years is 36 months. The leasing company determines what the vehicle will be worth at the end of the lease, known as the residual value. For example, $8,000 is the residual value. The amount of depreciation is calculated by subtracting the residual value. For example, $20,000 minus $8,000 equals $12,000 of depreciation. The monthly payment is calculated by adding the estimated amount of depreciation during your term plus the rent charge, taxes, and fees, and dividing that amount by the number of months in the lease term. For example, $12,000 divided by 36 months equals $333. You should question how accurate the residual value estimates is, because that value is used to determine the monthly payments and also the amount you pay if you decide to purchase a vehicle at the end of the lease. Leasing from lease here, pay here dealerships. Similar to buy here, pay here dealerships, lease here, pay here dealers lease older used vehicles to people with poor or no credit who often need quick access to a vehicle. Common features of these leases may be weekly or bi-weekly payments and high rental charges. If the vehicle breaks down, you may be responsible for repairs. The lease will also most likely not include any options to purchase the vehicle at the end of the lease. For leasing any vehicle, review the vehicle lease documents and terms clearly to determine if you'll be able to afford the payment into the future. And if it's the right deal for you, you should also ask if the vehicle is equipped with a device that shuts down the ignition if you miss a lease payment, or a GPS location device. Know before you shop. There are several important financial decisions to make before you shop for a car loan. Learn what questions to ask so you can make the best choice for you. I have a ton of different videos on auto financing. Take a look under the playlist Auto. My opinion about leases, I've never been a fan of leasing a vehicle, mostly because the lease company has so much control and restrictions over you and the vehicle. In other words, this mileage thing, 10 to 15,000 miles per year, they'll drive 4,000 miles in a month. This gets ridiculously expensive. In addition, this payback deal, if you elect to buy the vehicle, it's going to be juiced up so much it's ridiculous. Now, if you own a company, does it make sense to lease? I haven't crunched the numbers here, and I probably will have a worksheet at some point in time. I have a zillion of them. I just haven't produced a video on them. I've never been a fan of leasing, so comment. Let me know the advantages if you lease vehicles. If you own a small company, what are the advantages and the disadvantages? And if you are an independent contractor, do you find a benefit to leasing or purchasing? Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.